welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the latest trends from the stock markets, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing in trade. What we'll also focus on is where should your focus be amid this festive season, the stocks that you can keep on your radar, especially those stocks that are actually trading at big discounts from their all-time high levels. So perhaps you could be on a shopping spree this festive season when it comes to the stock market selecting of stocks as well. We'll come to all of that and we'll discuss all this with our expert of the day. But first up, a quick check on how the markets are doing at this point. Starting with the Nifty right now, a 16 point of a jump, merely a 19,768 kind of a level can be seen on the Nifty. So flattish to positive trend. The Nifty Bank holding just above the flat line at this point. Among the sectors, most of the sectors are trading with gains today, especially the metals that are shining the brightest. Over a percent gains can be seen for this one, followed by consumer durables, PSU banks. You also have the oil and gas and the broader markets. The small caps and the mid caps are doing better as well in trade today, much better than the benchmark indices. The only laggards being healthcare and realty space, flattish to negative kind of a move right there, but most of the sectors are holding up into the green zone as well. When we talk about the top gainers on the Nifty index, you will spot a lot of metal names right there. JSW Steel, Tata Steel, all up in trade right now. We also have LTI Mindtree, UPL, Hero Moto and Axis Bank as the other top gainers on the index. On the F&O space, you do have GNM, Gujarat Narmada Valley Fertilizers also in trade today as one of the top gainers as far as the F&O action is concerned. 5.5% move can be seen for this. You also have MCX, Chambal Fertilizers, NMDC and Aditya Birla Fashion Retail, one of the other movers as far as the F&O action is concerned. Now, when we talk about the top gainers as far as the Nifty 500 space is concerned, the broader markets, again over here, you do have a lot of fertilizer and chemical names coming back into action. Fertilizer and chemicals is up by about 9% in trade today. A very strong move being seen for this stock. So definitely a share fact is something that you should keep an eye out on. You also have Gujarat State Fertilizers up in trade as well. You also have Deepak Fertilizers that's moving up sharply. Then again Gujarat Narmada Valley. So a lot of fertilizer and chemical names coming back into place. You have Easy Trip Planners, 5% high in trade. Great Eastern Shipyard, again shipbuilder stocks that are coming back into flavor as well in trade today. So look at the sharp move over there and we'll try and figure out what is really happening in this space too. Time to welcome our guest on the show. Kranti Badini joins in, Director Research at Wealth Mill Securities. Welcome, sir, and thank you so much for taking the time out for this discussion. We will be discussing the top stocks that you're keeping on your radar amid the festive season. But first off, let's discuss the buzzing spaces today. The fertilizer and the chemical space is coming back into action. Could you reason out for us what is really happening here? Because intraday move suggests stocks like FACT and Gujarat State Fertilizers are all up by about 8-10% as well in trade today. So what's really happening here, sir?
Yeah, Sakshi, if you see the results momentum can continue in upside with respect to the fertilizer stocks are concerned. The sales can be robust this quarter and also the earnings can be robust for this quarter. So, and also at this point of time, as the market is trending at a higher note, we can see some kind of bargain hunting in these in the names what you mentioned, like the fertilizers and chemical stocks also. Chemical stocks, apart from chemical stocks, fertilizer stocks, it's more about the momentum with respect to the results are concerned. And also when the market is trending at a higher note at 19,800 levels, we can see some kind of bargain hunting also taking place with respect to the chemical stocks for a longer term perspective. So that's the reason the stocks in these both the sectors have been buzzing, but investors need to exercise. It should be more about stock specific action that's needed. But chemicals, one need to think with a perspective of longer term only. It should not be considered for the momentum at this point of time with respect to the chemical stocks are concerned. Because what we expect is, despite of the value correction in these stocks and also some kind of consolidation in these stocks, we need to see the recovery should happen with respect to the earnings are concerned in this quarter. So what we are expecting is the earning quarter for chemical stocks especially, it can be subdued for this quarter and we can see some kind of pressure with respect to their margins, with respect to the chemicals as a part. Coming to the fertilizers, they're buzzing right now. So the main reason is with respect to the earnings are concerned.
Okay, got that. Apart from this, the metal space, that's also looking good at this point in time. You know, stocks like JSW Steel, Tata Steel, they're all making a comeback as well. Is this looking like a structural story that could carry on?
Uh, Sakshi, with respect to the domestic Indian story is concerned, we can consider this as a strong capex cycle that's taking place in India. But globally, what we can expect is still we need to wait and watch the signals with respect to the global growth is concerned. Whereas the domestic macros and the capex cycle in capital goods and also the auto numbers. Coming to the domestic factors are concerned, of course, we can see some kind of bottom fishing that's taking place with respect to the metal stocks are concerned. In a domestic macro environment is concerned, Sakshi.
Okay, understood that. Let's now come to the segment that we are going to be discussing today, and that is where should to shop for when it comes to the festivities in the stock markets as well. A lot of stocks have been trading very strongly in the recent run up in the markets, but there are also a lot of stocks that are available at great discounts when it comes to their all-time high levels and 52-week high levels as well. So perhaps it could be a good time to really bargain hunt some of these stocks as well in this kind of a setup. So we are going to be discussing some of your favorite stocks, Mr. Patini, and where are you keeping your focus on, so that investors can keep an eye out on for these stocks that are actually trading at much lower levels when it comes to their all-time high levels. So let's start off with you. Which are the stocks that you're looking at? The first stock that you'd like to pick for today?
Actually, in these markets, looking for bargain hunting is a very challenging task, actually, because when the market is trending, most of the stocks are trading at very high valuations, and looking for margin of safety is a relatively challenging task at this point of time. The first stock we have at this point of time is Raymond. Uh, if you observe the stock performance, the stock has a multi-bagger stock in the past 1 year. In fact, the stock has rallied at a valuation of around price of around 700 to it touched a level of 2,200. So after touching that level, the stock has is in the consolidation phase at 1800 level. Given the kind of the overall the business segments playing for Raymond's, one is the core business, that is the textile business is concerned. The segment is doing very well as we are into the festive season. We can expect the robust sales numbers with respect to the core business, the textile business is concerned. And also, they are entering into the segments like uh, uh, traditional wear for the men. Okay, that also one of the strong business segment that's going to give the opportunity. And coming to the part, the main theme right now with Raymond's is the reality story. Right now, all the reality stocks have been posting their numbers in a strong way. So we can expect the Raymond Realty also post the strong set of numbers going ahead. The stock had a strong consolidation phase as the stock has rallied from a level of 1,000 rupees in the past 7-8 months back. So the stock is in a consolidation phase right now. So for the investors with a longer term horizon, definitely the stock offers a good entry level for the long term investors at this price point of time. So investors can take this price range to take the fresh entry into the stock, and existing investors can hold on to the stock, Sakshi, in a medium to longer term perspective. The other stock
Okay.
we have, yeah.
Right. So the stock that actually touched a 2240 kind of high levels has now come off. It 1792 can be seen for Raymond currently. The past 6 months performance tells you that it's up by about 29% odd. In the last 1 year perspective, if you see, the stock has rallied about 57, 58 odd percent as well. But definitely it's come off the high point of this year, and therefore you could see it as an entry point at this point. And strong fundamentals can continue to lead up to the further momentum in the medium to long term perspective for this stock. What is the target that you're looking forward for Mr. Pateni, for Raymond?
From this level, the stock can we can expect 20 to 25% potential upside for the stock, Sakshi, and also it offers a very good margin of safety for the investors at these market conditions.
Okay, got that. So Raymond from the textile space, realty space, a diversified group that you can bet on from the current levels for an upside of 20-25% over the long term perspective. Okay, sir. Which is the next stock that you would talk about today?
I'll go to the railway stock, Sakshi. Okay, the Jupiter wagons. The stock has rallied most recently, and at a range of above 400 levels, the stock touched. And the stock has been a phenomenal rally because all the railway stocks, with respect to the railway infrastructure and the wagon demand is concerned, the stock has been a stellar, given a stellar performance. The recent past, Sakshi. The stock had a consolidation at this point of time. So it offers a very good entry point for the investors who are investing for a medium to long term perspective. Still, the stock can offer 15 to 20% from this range for the investors. It do offers a good margin of safety for the investors. It is a stock to buy on dips due to the increase of capex in terms of the railway infrastructure is concerned. There will be a greater focus will be there with respect to the railway infrastructure is concerned. So Jupiter is one of the key beneficiary from this capex with respect to the railway infra is concerned. So investors can buy this stock at every dip from this point of
Okay.
time.
Okay, the stock currently trading around 308 odd levels, but definitely it was a stock that was trading above 400, 411 odd levels as well. So it is giving a good entry point, for the investors who may be looking at a fresh entry over here. Almost a year-to-date level suggests that a 220% surge is what we've already seen. So a remarkable rally has come in, and thereafter the stock is undergoing a sideways to consolidation period as well. And this could be a good entry point if you are looking at a long-term perspective. So from the stocks related to the railway theme that we've been discussing, this stock could be something that could be on your radar as well. So we've discussed the textile and the railways theme. Which would be the last stock that you would like to discuss today, sir?
So actually, we'll go to the big boy, HDFC Bank. Okay, the stock has been in terms of the stock performance is concerned, the stock has been a laggard in the past couple of quarters. But the stock had a decent consolidation phase. And what we can expect is the next leg of rally in banking and financial services. If the index has to rally, we expect the participation from HDFC Bank as the stock, the merger got completed, and some kind of skittishness with respect to the margins are concerned. And today the company is going to post the results, but the stock is in a consolidation phase right now. For a longer term perspective, it offers margin of safety and good potential upside. Still from this level, we can expect 15 to 20% potential upside for HDFC Bank at this point of time. So for the investors during this festive season, definitely this is the stock to keep on their watch list and on their to accumulate this stock in their portfolio.
Okay, got that. HDFC Bank. Definitely the stock is going to be in focus again today, especially because the company's earnings will be reported today again. And this will be the first quarterly result after HDFC Bank and had merged with HDFC Limited. So we will be keenly watching out for the results right there as well. And of course, we've seen in the last 1 month there has been an underperformance, an 8% drop for this one. Year to date levels, we have seen a dip of almost 6 odd percent for this leading bank as well. And overall in the entire financial space rally, this is one stock that has clearly not participated. So it has been on a downward trajectory. 6 months perspective, 8% down in trade, but we have seen that the kind of wealth creation it has done over many decades for investors as well. So 1531 also entries looks like a good entry point at this level for a lot of investors. What is the kind of target that you're looking at, sir, for HDFC Bank?
Actually, HDFC Bank, we can expect a very conservative target of 15-20%. But what it offers is it's not the target for 15-20%. The long term perspective and the margin of safety the stock offers at this price range, that is extremely crucial for the investors. It do offers 15-20% potential upside on a very conservative way, Sakshi.
Okay, 15-20% upside can be seen for HDFC Bank. Remember, from the 52-week high levels of 1757, the stock slipped quite a bit, and right now it's trading at 1532. Just slight improvement over the lowest point of the 52-week levels as well. But looks like a good consolidation zone where investors can continue to build positions right there. Well, many thanks, Mr. Badini, for being with us on the show and discussing three of your top
Always my
favorite
pleasure.
stocks for this festive season, and where you would advise investors to take a bet in case they are looking for value buys in this current discounted zone too. Let's get back to the markets then. 14-15 points of a surge for the Nifty, 19,767 currently, and the markets are holding steady as far as the momentum is concerned over the flat line. Not too much enthusiasm can be seen, but most of the sectors are also just holding up above the flat line. We'll continue to watch out for what the second half of the trading session really brings into us, because especially after the last week focus on the entire IT pack and the earnings right there, the focus for this entire week will also be on the banking front, starting with HDFC Bank, which is also one of the top picks that Kranti Badini discussed. And of course, the other banking majors will also follow to report their results. And in case the financial surprise on the positive side, there could be further momentum that the markets could be hoping to build on as well. We'll continue to track the market momentum for you, so you can be with us on Business Today Television. What you should also wait for is our special series, that's Market Masters, coming up in today's trading session with Vijay Kedia. You could also send us your questions live to be asked to Vijay Kedia as well. He's our Market Master of the day. The number is flashing on your screens as well, 7303080488. And this is where he will be discussing how to pick stocks and how to create a winning portfolio, so don't miss it.